Hey everyone, welcome back to Streetwise Economics. It's week 24 and I'm excited to share a quick update on my trading journey. This week my account is up 48%. My equity now stands at Canadian dollar 31,841 dollars 15 cents, up from the starting capital of 21,484 dollars 9 cents. So let's break down what's working, what I'm watching, and the lessons I'm learning in today's fast moving markets. Now, as always, this video is for educational purposes only. What I share here is based on my own experience and research. Please do your own research and due diligence before making any investing or trading decisions. Number one, my portfolio and the major updates for this week, I still maintain the core positions of Aritzia and Berkshire Hathaway Class B as my main equity holdings. I'm still running cash secured puts for stocks with ticker name MU, F Murphy Holdings, LBRT, SOFI, Dogs, SHOO, Kraft Heinz, ticker name KHS, and the stock with ticker name AA for aluminium products. I'm holding a strike $220 strike call for Reddit, a leap that expires in June 2026. I plan to exit if I see a solid profit. I have a sell order at some level, or if I approach 9 months from now and I'm still in the loss making, I'm just gonna exit the position. That's trading. You win some, you lose some, but the idea is to have more wins than the losses. So I was sitting on $26,861 cash last week. I'm recording this video on the 30th, but I'm giving you an update for last week because I just want to do week by week. And I love having cash because for me, it lets me act fast when opportunities pop up, especially in these volatile markets. Trust me, I've made money by just having cash rather than letting it sit in the, in an account that doesn't yield some profit. So I just keep the money there. If I see an opportunity, especially when there has been some earnings, I then quickly deploy the money. I take a trade, I get in and I get out. That has been helpful for me. Now, I'm gonna talk about market volatility and lessons that I've learned so far. US markets have been on a roller coaster lately. Big news on trade policy and tariffs, the so-called taco trades, has kept volatility high. We have seen strong moves in tech stocks with Nvidia and Salesforce beating earnings and helping the S&P 500 and Nasdaq finish May on a positive note. But every headline out of Washington can spark a new round of buying and selling. A key lesson I'm learning this year is that it's not just about picking stocks or timing the market. Staying up to date with the policy changes and global events is crucial. Volatility isn't always bad. It creates chances for disciplined traders to deploy cash and manage risk. Right now, President Trump is speaking on his press statement with Elon Musk, and I'm gonna quickly listen into that. Now, risk management and strategy, I'm sticking to cash secured puts for income and potential entry into quality stocks at lower prices. I'm not selling covered calls right now since the market rebound means I don't want to keep my upside. Risk management is always front and center. I avoid over leveraging. I only use leveraging a bit of it, not more than 30%, if I see conditions that pass my checklist. And that's something that you can learn if you join me in my coaching community where I teach people how to trade and invest profitably. I keep a healthy cash buffer like you see right now in this trading account. Again, this is trading. Investing, I also like to keep cash, but I am a bit more invested in the stocks that I like. I size my trades so that one bad move won't blow up my whole account. I'm also patient with lips on Reddit, like I just shared, letting time work in my favor unless the trade thesis changes. So what's next? Looking ahead, I'm watching for more policy news, especially around tariffs and trade negotiations. The market has bounced back from the April drop, but as Morningstar and other big institutions such as JP Morgan and Goldman Sachs note, more volatility could be ahead as we approach the next round of trade deadlines. I am keeping cash ready and staying nimble, ready to buy great businesses if we see another dip. And another interesting thing is there are things that happen across the economy, but then there might be some company-wide specific things that can cause the market or that particular stock to drop significantly without the fundamental of the business changing. And those are the opportunities that I usually keep an eye on. So now, to sum up, my account is up 48% this year thanks to a mix of patience, discipline, and readiness to act. I know it dropped a little bit, but that's what happens when you are trading or investing. The stocks or the equity doesn't just go up in a straight line, it usually fluctuates. So I'm comfortable, I'm holding wonderful businesses, but volatility is here to stay. So stay informed and keep your risk in check. If you found this video helpful, watch more videos, subscribe to Streetwise Economics here, and follow me on social media platforms, and book one-on-one coaching on trading and investing on www.streetwiseeconomics.com for practical investing and trading guidance. Stay wise, stay patient, and happy trading. See you next week, and till next time, may you trade and invest wisely, and may the markets be on your side. Bye bye for now. Thank you.